Hey everyone, welcome back to Corporate Decoder. Today we're diving into Owens Corning's latest financial report, aka their 10Q filing, and let me tell you, this one's got some spicy details about a major acquisition and a big fat Goodwill write-down that will keep us busy. If you appreciate getting straight insights from these dense corporate documents, make sure you are subscribed. We also have a Discord community linked in the description below where we break down even more of these reports. This report covers the quarterly period ending in September of 2025. Owens Corning, a company that makes building products like roofing and insulation, has been busy. They acquired Masonite International Corporation in May of 2024, a big move that significantly changed their business. And it is not all sunshine and rainbows. Let's start with the top line sales. For the 3 months ending the 30th of September 2025, Owens Corning brought in $2.684 million. That is a bit less than the $763 million they made in the same period in 2024. So a slight dip there, but looking at the bigger picture, the 9-month period shows a jump. From January to September in 2025, sales were $7.961 million, a nice increase from $7.277 million in the first 9 months of 2024. This jump is largely thanks to that Masonite acquisition, which added a lot to their doors segment. Now, gross margin is what is left after you subtract the cost of making your products. In the third quarter of 2025, it was $757 million, down from $851 million in 2024. This dip seems to be because, well, things cost more and they sold less in their insulation and doors businesses. For the 9-month period, the gross margin actually went up a bit, from $2.292 million to $340 million. Again, Masonite is helping here, but they are also facing higher costs. Now, let's get to the headline grabber. In the third quarter of 2025, Owens Corning recorded a massive Goodwill impairment charge of $780 million. What does that mean? Well, when a company buys another company, they often record Goodwill on their books, which is basically the premium they paid over the fair value of the acquired company's assets. It represents things like brand reputation, customer loyalty, and expected synergies. When the value of that acquired business falls well below what the company paid for it, they have to write down that goodwill. And that is what happened here with Masonite's doors business. They paid a lot for Masonite, and it seems the expected future performance of that business, especially in the current economic climate, is not what they projected. The fair value of the doors reporting unit fell below its carrying value, forcing this huge write-down. This line item also saw some big swings. In the third quarter of 2025, other expenses dropped significantly to $23 million compared to $89 million in 2024. For the 9-month period, it fell from $258 million down to $72 million. This decrease is good news, mainly because they had fewer acquisition-related costs and strategic review costs in 2025 compared to 2024. This is the bottom line from their ongoing operations. In the third quarter of 2025, they reported a net loss from continuing operations of $495 million. That is a sharp contrast to the $287 million in earnings they had in the same period of 2024. For the 9-month period, they reported earnings of $94 million in 2025, a big drop from $821 million in 2024. The Goodwill impairment, along with other factors, significantly impacted their profitability. This refers to the glass reinforcements or GI business that they are selling. In the third quarter of 2025, they reported a small gain of $1 million from this discontinued part of the business. However, looking at the 9-month period, they reported a loss of $318 million. This loss is mainly due to the classification of the GI business as operations held for sale, and the associated write-down based on the agreed selling price. When you put it all together, their total net loss earnings for the third quarter of 2025 was a loss of $494 million. That is compared to a profit of $321 million in the third quarter of 2024. For the first 9 months of 2025, they reported a net loss of $224 million. A huge swing from a significant profit of $905 million in the same period of 2024. The numbers clearly show the impact of the Masonite acquisition, the GR divestiture, and the massive Goodwill write-down taking a toll on their overall profitability in 2025 so far. To break down that massive Goodwill impairment, it is all tied to the door segment, which is essentially the Masonite business. The company is saying that due to macroeconomic challenges, like slower construction activity and the impact of tariffs, the future earnings potential of this segment is looking much weaker than they initially thought when they bought it. This led them to reevaluate the goodwill associated with that acquisition and take a substantial hit to acknowledge that decline in value. Let's look at their segments. The roofing segment is holding up relatively well. Net sales increased slightly in the third quarter. and for the 9 months their EBITDA, which is earnings before interest, taxes, depreciation, and amortization. Also saw a modest increase, they're reporting higher selling prices, which is helping them offset some rising costs. The outlook suggests they expect continued demand, though they're keeping an eye on things like weather, competition, and raw material costs. The insulation segment is facing more headwinds. Net sales decreased in both the third quarter and year. To date periods, they're seeing lower volumes and a negative impact from selling off their building materials business in China and Korea. EBITDA is also down. They're dealing with production downtime and rising costs. The outlook here is tied to construction activity, and they see challenges ahead, particularly in North American new residential construction due to mortgage rates. This is where the big acquisition is really impacting the numbers. Net sales for the doors segment decreased in the third quarter, mainly due to lower volumes and prices. However, for the 9-month period, net sales are way up because of the Masonite acquisition itself. But looking at EBITDA, it is down significantly in the third quarter. They blame higher costs, lower volumes, and pricing pressures. The outlook for this segment is cautious, with expectations of continued challenges in North America and Europe due to a weaker economic outlook. This is where all the stuff that doesn't fit neatly into a segment goes, and it is heavily impacted by that goodwill impairment. The EBITDA here is a big negative number, mainly because of that $780 million goodwill write-down. Outside of that, general corporate expenses have also inched up slightly. When it comes to staying afloat, Owens Corning seems to have a decent handle on things. They have cash on hand, a commercial paper program, and a solid credit facility. They even increased their revolving credit facility and extended its maturity. They've also terminated their receivables securitization facility. Streamlining their financing, basically they're saying they have enough money flowing in and available to cover their needs. Square the company's 2030 sustainability goals, Square. On another note, their sustainability goals are pretty ambitious, aiming for significant reductions in energy use, waste, and emissions. This shows a commitment to environmental responsibility, which is increasingly important to investors and consumers alike. Looking at their balance sheet, accumulated other comprehensive deficit was negative $455 million as of the 30th of September 2025. This is a measure of unrealized gains and losses, and the negative number indicates they have more unrealized losses than gains. Changes in currency translation adjustments and hedging positions have impacted this number. Their total liabilities have crept up slightly to $9, $0.79 million from $8, $955 million at the end of 2024. This increase is driven by higher long-term debt, which is a common consequence of a major acquisition like Masonite. On the flip side, total equity has decreased from $5, $120 million at the end of 2024 to $4, $438 million by September 2025. This decline is primarily due to the net loss in 2025 and share repurchases, which reduce equity. The Goodwill impairment charge also plays a role in reducing their overall equity base. They also announced a new share repurchase program in May 2025, authorizing them to buy back up to 12 million shares. This suggests the company believes its stock is undervalued or they're looking to return capital to shareholders. They've been actively buying back shares, which reduces the number of shares outstanding, potentially boosting earnings. Purse hair now. Looking at these results more broadly based on a Warren Buffett-style analysis. Owens Corning is clearly in a state of transition. The Masonite acquisition has expanded their reach and revenue, which is a strategic positive. However, the massive goodwill impairment charge is a wake-up call. It signals that their initial valuation of Masonite might have been overly optimistic, or that the market conditions have deteriorated more significantly than anticipated. This write-down doesn't directly impact cash flow, but it does reduce shareholder equity and raises questions about management's initial assessment. The challenges in the insulation and doors segments, combined with the ongoing divestiture of the gear business, suggest that the company is navigating a complex operating environment. They're trying to streamline and focus, but there are clear signs of pressure on their margins and profitability. The increase in debt to fund the acquisition is understandable, but adds financial risk. On the flip side, the roofing segment appears to be a sturdy performer, providing some stability. Their commitment to sustainability is also a good long-term signal. However, the overall picture is one of a company dealing with the integration of a large acquisition and a shifting business landscape. The significant goodwill write-down, coupled with declining segment profitability in insulation and doors, suggests that the integration of Masonite is proving more challenging than expected and the market headwinds are significant. The company needs to demonstrate it can turn around the performance of the doors segment and manage its debt levels effectively. Alright, that is our breakdown of Owens Corning's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think they will successfully integrate Masonite? Or will the Goodwill impairment be just the beginning of their struggles? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives into corporate filings. Don't forget to check out the Discord in the description for more insights and discussions. Thanks for watching. See you next time.